We've got Iyan Adewuya here from our deals desk with hopefully an answer to that, or at least a good gauge of it.
Well, absolutely. I think it's going to be interesting. There's a 40-day go shop window, and people are looking at the valuations of these deals and of this particular deal, and some strategic acquirers out there. If you look at some of Dynegy's peers, maybe looking at the deal Blackstone got and say, can I offer 50 cents per share more and maybe get in this thing?
Now, you point out this is the largest takeover, or would be, in the independent power producer industry year to date.
It would also be the second largest private equity deal, which is more important to me. And if you look at the structure of the transaction, I mean, you look at the guys at Blackstone, pretty brilliant what they're doing from a deal structuring standpoint. They're buying Dynegy at about $4.5, $4.7 billion. But at the same time, the more important part of this deal is the side agreement they struck with NRG to sell 4 power plants for $1.3 trillion. Kind of the same strategy.
$1.3 trillion.
For $1.3 billion, excuse me. So, I mean, you have a deal here which is an on-sale transaction. Blackstone did much the same thing when they bought equity offices properties, and right at the same time, before or right at the time the deal closed, sold major buildings, some of the key assets of that company. So it may look like a big deal, but Blackstone is getting a pretty sweet deal here. They're going in, all equity, which is something private equity players are having to do more and more these days, for about $560 million, but at the same time turning around and selling 4 power plants to NRG for $1.3 billion.
And putting in more equity, that's been a change post-crisis, because these are, the covenants and the deals are just structured very differently.
Yeah, your banker is not your best friend in this environment.
Well, you point out there's a 40-day go shop window. What are the odds that we're going to see this actually turn into a bidding war? It's a pretty big amount to pay out.
Well, we'll see when the definitive merger agreement comes out, and we'll look at what kind of termination fees are in there and what the size of that termination fee. It also depends on whether other bidders think they can still get a good deal and the way this deal is structured. So
this is the second largest acquisition by Blackstone since 2007.
It speaks to the fact that there have been very few deals in the private equity market since. I mean, after they did that Hilton deal, which they've been struggling with, by the way, there's been a near shutdown of the private equity market. We've seen a rebound coming into this year, and things are starting to pick up again. Blackstone been surprisingly quiet this year. Carlyle has been very aggressive, very acquisitive, looking for entries and exits. Blackstone very quiet, but they're back in the game.
They came back with a bang, at least today. All right, thank you, Iyan.